Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. On Friday, the Australian dollar bulls managed to reignite the flame to the upward momentum and extended its rally against the greenback above the 68-cent level for the first time this month, after posting an intraday high of 68.09. With the resistance still seen there at 68.25, along with the fact it is the 60-day moving average, the market is struggling from what I believe could see a pullback. But to trigger the downside, we need to see a move through 67.50. If that is broken, we will see a move potentially back to 66.70.80. What triggered the rally on Friday was Trump said that the US and China trade deal will now be coming in phases. So therefore, let's see what is wrapped up with the second one, because the market is a little bit uncertain due to the fact is that on Friday, US Trade Representative Robert Lighthizer said a decision has not been made over the additional tariffs of December, even though Trump has postponed for now the one that was likely to be seen on the 15th of October. But as I say, that's been postponed, but the December tariffs have not as of yet. So we do see a break of 65 on the downside, which, as I say, is the trigger level, so 67.65 to be exact. Is I do look for a reinstate to the downside of 66.70.80. Ahead this week, we are looking for, on Tuesday, the RBA monetary policy meeting minutes. And then on Thursday, we do have the official Australian employment numbers. The forecast for the employment change is 15,300, a low number, with the previous number 34,700, which was all part-time jobs. And then we have the unemployment rate still holding steadily at 5.3, but the RBA wants to see that down at 4.5%. So could we be seeing another rate cut in November? Well, the big question mark is keep an eye on those numbers this Thursday. The euro took a challenge to the upside after the news announcement from Trump in saying that the US and China trade agreement had hit its first phase of a border trade deal. Looking at the technicals, I have been for some time now saying a break above this trend line will give us opportunity to shorten the market. Well, the next resistance I saw was at 110.65 as minor, and then 111 figure 15. Well, on Friday, we did get to a fresh intraday high of 110.62, its highest point since late September. And from this, I'd still feel the market is taking the opportunity to shorten the market, because I'd still feel we could see a pullback. The trigger level was still seen at around 109.75. Now, a break beneath there would reinstate the downside to 108.65. The dollar yen, took a challenge to the upside and found resistance around 108.60 after posting an intraday high of 62. It is assessed from the technical pattern we should see another rejection. I'm not getting overly bullish at these highs because the technical implications are still somewhat discouraging and therefore should see a pullback to 107.80, that is, and 107.35. Well, the pound, since breaking, first of all, should I say, the rejection of 121.70 and then breaking 124 and then rallied on to a target of 125.60-65, met after it pretty much rallied in 2 days 500 points. And as it soured, it claims a fresh high of 127.06, last seen back in July. From the rally, it was all triggered off after signified that the UK and the EU had reopened negotiation channels to try to clinch a new deal ahead of this week's key EU summit. Still, the clock is ticking and we still got October the 31st, only a handful of days away, to see whether they can come to a deal and see a departure from the EU and the UK. With my target reached at 125.60-65, I am neutral in the short term. Gold failed to take continuous decline from the break of 88, but still somewhat is a little bit mixed here. From the technicals, I'm not playing into this whipsaw price action and rather sit out for now because I still believe opportunity will arise with gold, but it's about timing. So let's see where the market plays in the next 24 hours. Wrapping up with oil, well, since the rejection from that 51 region, rallied on to about 2.5% on Friday after Iran decries cowardly attacks on an oil tanker. But there's still a little bit more into that story as of yet, but the market is somewhat a little bit optimistic about it and actually surged from the news 2.5% on Friday. And also to the fact is the objective is still holding now at 56, 50, 70 after breaking above the resistance of 54, 20, 35. So my target stop style is in holding along with these bullish indications. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to this new day and the new week.